Income tax return audit forms now live on eFiling portal for I-200 and 2526. Do you need to file them? Taxpayers and chartered accountants can now access and file forms 3CA, 3CD and 3CB, 3CD for the financial year 200 and 2425 assessment year 200 and 2526 on the Income Tax Department's eFiling portal. Kind attention taxpayers. Forms 3CA, 3CD and 3CB, 3CD are now enabled on the eFiling portal with changes as per notification No. 232025F. No. 3701421020025 TPL, said Income Tax India in a post on X. Kind attention taxpayers, Forms 3CA, 3CD and 3CB, 3CD are now enabled on the eFiling portal with changes as per notification No. 232025F. No. 3701421020025 TPL pic.twitter.com's 3AVJSCMT8 Income Tax India. Income Tax India, July 18, 2025. The forms are crucial for tax audit reports filed under Section 44 of the Income Tax Act, 1961. While Form 3CA, 3CD is applicable to taxpayers who are already required to get their accounts audited under any other law such as Companies Act, 2013, Form 3CB, 3CD is for those who are not mandated to undergo audit under any other legislation but still fall under the purview of Section 44 of. The availability of these forms signals the formal start of the tax audit season for the assessment year 200 and 2526. Tax audit reports are generally required to be submitted by September 30, 2025, unless extended by the CBDT. Once the audit report is filed, taxpayers are required to file an income tax return ITR on or before October 31, 2025. It is important to note that the last date to file non-audited ITRs is September 15, 2025. Tax professionals had been awaiting the release of these forms, as their availability is essential for completing audits well within the deadline, especially for businesses and professionals with turnover or receipts exceeding the prescribed limits. Earlier this month, the department released various other ITR forms for different taxpayer categories and continues to update the eFiling utility for seamless compliance. Who needs audit for ITR filing? Swipe left for next video. As per Section 44 of the Income Tax Act, 1961, a tax audit is mandatory for individuals, firms, or businesses whose total sales, turnover, or gross receipts exceed Rs 1 crore in a financial year. However, this threshold is increased to 10 rupees crore if the taxpayer's cash receipts and cash payments do not exceed 5 of total receipts and payments, respectively. For professionals, a tax audit is mandatory if gross receipts exceed 50 rupees lakh. In the case of taxpayers opting for presumptive taxation under Section 44AD, audit becomes necessary if turnover exceeds 2 rupees crore or if they declare income lower than the presumptive rate and their total income exceeds the basic exemption limit. Similar provisions apply under Section 44ADA for professionals and Section 44AE for transporters. The audit must be conducted by a chartered accountant, and the report must be submitted in Form 3CA, 3CB along with Form 3CD before the due date. Latest blogs